All right, everybody, welcome back to the Realty Rundown with the Nick Wise team. I'm Nick Wise, here with my co hosts Nathan Schwartz and Brianna Gilbert. Today, we're diving into a topic that's critical for every homeowner: how to protect your biggest investment, your home, and understanding homeowners insurance. Homeowners insurance is the safety net that protects one of the biggest investments you're ever going to make.
That's right, Nick. This week we'll discuss how to navigate the complexities of homeowners insurance, highlight some recent challenges faced by homeowners in Los Angeles, and cover what you need to know when choosing a policy.
Right. And today we have a special guest, Matt Carver, an insurance expert. He's joining us today to share his knowledge and answer all of your burning questions.
Thanks for having me, guys. I'm excited to share the knowledge that I have about homeowners insurance policies, what it covers, what it does, what it doesn't do, and why it's so important to have, and the complexities within it.
I like the way that Brianna, you worded that, the burning questions. I don't know if that's a play on words a little bit because right now that's definitely a topic we're going to get into. But before we do, I want to start kind of with the basics. Matt, in your opinion, why is homeowners insurance so essential?
Well, not just, I mean, with any insurance policy, it's really about risk management. It's really about, you have homes in particular are typically people's or families' biggest financial asset. And if something were to happen to it, there's damage to it or somebody gets hurt, the things inside of it, catch on fire, or, again, no pun intended with all of the craziness in the world right now. But, obviously it's really peace of mind. It's making sure that, if something happens, you're not going to fit the full bill on trying to get it fixed or replaced. And that not only covers also, the house itself, the contents, the additional structures that may or may not be there, all of it encompassing to make sure that your financial peace of mind is there. So it's really about risk management.
And how do you think that the recent fires in California would factor into that?
Well, in all honesty, the uniqueness about our where we live in Indiana, obviously you can have a wildfire or fire problem anywhere, but it's obviously affecting, the West Coast a heck of a lot more at the moment. And it's very prevalent. Want to make sure, obviously, that, in areas like that spot where there are more prone damages and kind of flip the script, but also like in Florida where there typically are a lot of hurricanes. You hear about, insurance companies just packing up, shop and leaving and not even offering insurance policies in Florida, or making it very difficult to get it. So, you want to make sure that what you are paying for does the things that you're paying the premiums for it to do. And so making sure that, the premium is correct, the coverage is correct. But also you want to be cognizant of where you're at and what risks, are coming your way. So.
Yeah. So what should homeowners do if they're at risk of losing their homeowners insurance or if they've already lost it?
Well, the first thing to do is contact, your current agent, contact me, contact anyone that can help put together a policy for you there. Just because maybe one insurance company is not able to provide coverage, that doesn't mean that all of them aren't. There are ways to find packages together if there isn't one that you can find. So, making sure that you are doing your due diligence and talking to as many people and doing a little bit of shopping to see, what's covered and what's not covered, I think will, especially in those higher risk areas, are going to be able to, you'll have a little bit more success and a little bit more peace of mind having those conversations. So not doing anything is probably the worst thing you can do. And just, having conversations with people that are in the know will get you educated and point you in the right direction of where to get what you need.
Yeah, it seems like right now, obviously everybody's interested in insurance because of the situation in California, and why that happened. Matt, I know when we talked before, you mentioned, I think it's called reinsurance.
Yeah. So depending on the size of companies, most insurance companies, the big name brands that everyone's heard of, You know, what happens if there's a catastrophic situation where, like California, like let's assume that you wake up tomorrow morning and every single house in California is gone because of a wildfire situation. I know that's kind of a crazy scenario, but we're not too far from, imagining that from happening. And so, an insurance company, their responsibility is to, assuming you have a policy in place that's active and in good standing, the responsibility of that insurance company is typically to replace, a structure if it's destroyed. And fire is typically one of the number one things that are covered on most, if not all, insurance policies when you're talking about homeowners policies. And so, obviously, when you're a big corporation or a big insurance company, you need help managing that risk, because at the end of the day, if it was just a few homeowners policies, or homes, maybe one or two fires kind of a thing, most insurance companies are financially stable enough to be able to take care of that without any extra assistance, right? And so, we have partnered with. There are insurance companies that most people haven't even heard of that you can't get insurance through personally, but their main job is to back those catastrophic losses, in the event that an insurance company doesn't have the funds available to pay out a claim. And so what I have found is the larger the company is, and I without naming any names, typically the nationwide state brands that you've probably heard of, the larger they are, typically those companies have less. They are big enough to be able to. They believe they're big enough to be able to withstand, those major catastrophic things. So they typically don't go with reinsurance partners or other companies to help them offset maybe a potential catastrophic loss. But those connections are so important, because obviously the last thing you want to be in a situation is you've paid this premium, and it's a catastrophic loss across the country or across the state or whatever the case may be, and now all of a sudden your insurance provider says, sorry, this is too much for us, we can't do it, and then you're back to square one, and more frustrated now than you've ever been, and going all starting over. So reinsurance is something that's typically not talked about too much in the insurance world, but there are doing your due diligence and asking those questions when you're looking for a homeowner's policy to make sure that, hey, if something really bad happens and you guys don't have the money to pay a claim, do you have the assistance that a reinsurance provider would offer? That's a question that doesn't get asked, and that's a question that you might want to think about.
Yeah, you said people have been paying their premiums. Imagine that scenario. I paid my premium for 30 years, and all of a sudden the company pulls out and I'm without insurance, and then the fire happens, and it's like, oh my gosh, these poor people have paid how many tens of thousands, if not hundreds of thousands of dollars. My understanding, and I don't know how much you want to speak to this, because like I said, I've gotten really interested in what's going on out there and how we're going to recover from it as a nation, because this is going to end up probably being a national thing. Mm-hmm. These insurance companies needed to and wanted to increase their premiums, but there is a state level of control. There's actually an agency within the state, I believe, that actually dictates what an insurance company can charge in an area. And so you've got these companies that are like, hey, we've been insuring these homes. There was just one of these fires 6 years ago that really could have caused more damage. What if that happens again? We need to raise our premiums. And the state came in and said, no, we don't want you to do that. That would affect home values. And these are some pretty influential people out here in the Palisades, and we don't want you to negatively affect their home values or their ability to pay those premiums.
Well, I think it's important first to know that insurance is regulated at the state level. So every state has its own department of insurance. And so what you're alluding to, Nick, is essentially you just can't wake up one day and say, hey, geez, I'd like to profit another 200% this year. Let's raise the rates times 5 for everybody, and just hopefully we'll get all this extra money. It's not done that way. The Department of Insurance in Indiana regulates what an insurance company is allowed to charge based off of their profits and losses, their claims history. And there's a lot of justification that goes involved with, whatever those rates may be, kind of a thing. And so you are correct in that. And on the same level, when I can't speak, I'm not an expert on the Department of Insurance on each state's level. Obviously, Indiana is the area that I'm obviously more well versed in Indiana than in California, but you're right there in that situation in California. You're going to have situations that an insurance company is not just going to be able to walk in and say, hey, this is what we're charging, this is what our expectations are. That kind of gets handed to that insurance company by the Department of Insurance.
Yeah, it reminds me of a scenario that I personally went through, and I think probably a lot of other people in this area did, where a pretty big provider here locally became insolvent. And when we had the hail damage of a couple, a year ago or whatever it was, a year and a half ago, they were not able to pay on all the claims. And so I actually had to go then to the state, and the state has some kind of a guarantee fund. And I was able to get not coverage, but I was able to get reimbursement through that process. It wasn't the most fun process ever, but eventually we did get reimbursed. So I know there's some coffers, but I think, when it becomes, like you mentioned, catastrophic, when it's such a huge area,
right,
there's not the money there to cover it.
Yeah, and unfortunately, the state can only hold so much. I mean, they don't have an unlimited amount of funds, unfortunately, to just be able to do that. That's why you have an insurance company that hopefully is doing their due diligence and isn't in a sound and positive financial situation for themselves to be able to withstand those big things from happening. An insurance company, a good insurance company, I work for Indiana Farm Bureau Insurance, and so we don't think of situations of, gosh, I hope this doesn't happen. We plan assuming that something will happen, because we all know we live in Indiana, and we have, at the very least, we have winds, tornadoes. You hear about them every year. We hope that it's not a huge deal, and there are no touchdowns and very little or zero, obviously zero, but we hope there's a small impact when those situations occur. But also we know that, like what you're alluding to, it could happen at any time, and it could be a major issue, kind of a thing. And so we plan on our side, our company plans for thinking of worst case scenario. What is the worst case scenario? And then working backwards, instead of trying to play the game of we'll try to assume that it's not going to happen, and then when something does, now here we are, and we're looking foolish, and so that kind of a thing.
Unfortunately, we're seeing some of that play out west. Well, as usual, I talk a little too much, and I get away from our planned conversation. I don't want to take Brianna. I know you had a really good question that you had for Matt, so I want to let you get to that too.
Yeah, the NAR article mentions that not all homeowners insurance is created equal. Can you break down the types of coverage that people should look for?
Yeah, so you want to. That's kind of. I obviously haven't read that article, and when you talk about not created equally, there are a few different types of homeowners policies, but typically a standard or a traditional homeowners policy is really going to do four things for you. It's going to have, and every company has it. If you look at your declaration page, you can see the four coverages. For example, and the way that we break it down is coverage A, B, C, and D. And so coverage A is essentially going to be the replacement value on your home. And so one of the things that typically happens is you buy a house. Let's say you buy a 20-year-old home, and it costs you $250,000 on the market, right? That's what you bought the home for. But you and I, having been in this world for as long as we have, Nick, for sure that if you were going to build that exact same home from scratch, it's going to cost a lot more than $250,000 because you got to pay for labor, you got to pay for the supplies, the lumber, all of the extra things that go into building a home. It always costs more to build a new house than it does to buy an existing one. And so our responsibility as an insurance company is to basically, if something happens to your home, our responsibility is to rebuild it for you the same size and scope as what it is right now. And so, when you're talking about that's that coverage A part. So when you're looking at the dwelling coverage, you want to make sure that, there should be more coverage there than what you bought that existing home for. Typically, we have a program that we use, a replacement cost estimator, that we build your home for you, and it comes back and it says, hey, if you're going to build this house in Elkhart County in 2025, here's what it's going to cost you to build, and that essentially is what the replacement value becomes, right? So you have the replacement cost of your home. Then coverage B is your contents, or I'm sorry, coverage B is the other structures there. So if you have a detached garage, typically that is a standard 10% coverage of whatever. So if you have a $250,000 home, $25,000 additional dollars is set aside for any other structure. Coverage C is going to be for your personal property. Now, not all created equal. There's typically, when you're talking about traditional homeowners policies, there's two different kinds. That's probably a whole nother segment, whole nother podcast to get into the specifics of the two different kinds. But essentially, you're going to look at between 50 and 75% of the value of your home is going to be set aside additionally for the replacement of the contents. So to keep numbers simple, if you had $100,000 home, $75,000 additional would be set aside to replace all of the contents. So your clothes, furniture, TVs, all of the stuff that you would have, right? That's how they calculate that number. Last thing is coverage D, which is called loss of use, which basically means if something, a tree falls on the roof of the house, you can't live there until the house gets fixed because you have a glaring hole in it, kind of a thing. Well, you've got to live somewhere, and you've got to have food and living, to live. And so your insurance policy is going to have money set aside to basically, whether it's a hotel, whether it's a rental, whatever the case may be, to get you to live somewhere temporarily, and the cost associated to that while you're getting your house fixed. So that should be included on when you're looking at, buying a new home. Those things should be on there automatically. And the nice part about, homeowners insurance policies is that even though they're regulated at the federal level, it's across the board. It's the same. So all insurance companies should have coverage A, B, C, and D. And if you see one that doesn't, then it's probably not a homeowner's insurance policy. So that's really where you want to kind of fall into place. Now, some companies might call it a different letter, but traditionally it's coverage A, B, C, and D kind of a thing. Then you talk about liability coverage and some other things that are going to be attached to that. I don't want to talk too much because I don't want to make the video too long, but happy to answer any of those specific questions. But those are the things that should definitely be on there.
Well, I know with personal property, Nate is worried that his flight simulator equipment won't be covered.
That's right.
I don't know how that qualifies or not. No, getting seriously though, that's a lot. Obviously, that is a lot of things that are covered, but there's also some that aren't necessarily covered in those policies. Like exclusions, I guess it would be called, or coverage gaps, maybe. Am I making sense?
Yeah, the biggest one's going to be flood. A homeowner's policy is not a flood insurance policy. There, you have to have a separate policy for if you're in a flood zone. And really, to be honest with you, when it comes time for, hopefully you never have to deal with a claim, but if you have to deal with a claim, the trickiest one to figure out, because flood is not covered, is if you have water, if there's a water issue in your home, where's that water coming from? And the thing to remember when you're talking about a claim situation is it really boils back to what caused the damage, right? You had a tree, again, back to the situation I just gave, a tree falls on the house, leaves a big hole in the roof. Obviously, it's also raining and thundering, and water is now going through that hole and causing water damage into the house, right? Is that covered? Absolutely. Why? Because wind blew the tree over, landed on the house. So wind typically is a covered peril on a homeowner's policy. So because that was the root cause the damage from the water would then be covered in that situation, if that makes sense. So there's a lot of scenarios. I encourage you to sit down with and review your policies. If you do have an existing policy, get with your insurance agent, ask some basic questions, get of understanding of just, you don't have to be an expert. You're partnered with hopefully you've partnered with an insurance agent that you can contact and have a conversation with, and that you trust, and that would be able to answer those questions. But if you, the thing I tell people the most when I'm reviewing, policies with my clients is, please ask questions, because I love being put on the spot, because, I've got the basics that everyone probably needs to know, but you might have a scenario that happened, or it happened to your neighbor that's very unique. And so what would happen if that happened to my house? Ask those questions, because you need to feel comfortable. Insurance is something that you have to for the risk management. And if you're going to pay for it, I recommend understanding it at least a little bit, or trusting the person that's helping you with it to get you the right answer, so that you feel comfortable with what you're doing.
Mm-hmm. Well, Nate, that kind of leads in. You had submitted a question to us too, I know.
So there's obviously other exclusions as well. I think that the biggest answer get with your agent, ask questions. And if you don't have an agent, if you're looking to buy your first home, lean on your realtor. Your realtor is going to know, have a lot of contacts of people that have done good jobs and have helped them. Focus, use those people that you've partnered with that have great experiences, and they're gonna want to give you that same experience, and so they're going to recommend people that are going to do a good job for you.
Yeah, that's good. I know we're kind of getting over 20 minutes here, but one thing real quick: what advice would you give to buyers, sellers, and homeowners when it comes to choosing the right policy?
Honestly, just to kind of reemphasize what I just said, I think that the biggest thing is first of all, reach out to the people that you lean on for advice. Do some shopping, talk to people, have a conversation. When you have those conversations on the phone, what's that rapport look like? Or is it somebody that you can call that you'd feel comfortable calling at 10 o'clock at night when there's something going on in your world, and they're going to be the ones picking up the phone and answering and talking you off the ledge, so to speak, and making you feel a little bit better about your situation? The biggest thing obviously is from a cost perspective, you're always going to save the most money if you bundle everything together. When I talk about everything, typically your home and your auto policies. There are some people out there still today, and it still blows my mind that they'll have their auto insurance with one company and they'll have their homeowners insurance with a different company, and they're basically just losing out on a huge percentage discount between, sometimes between 18 and 25%, depending on the situation that you're in. So, I always recommend, looking at those things. And the biggest thing I think is to make sure that you're doing reviews. Don't just set up, you bought a house today, the Remax team here got you set up with a home. You got an insurance policy. Don't let that be the last time that you ever think about it. Homeowners insurance. Get with your agent, even if it's for 15 minutes once a year. Just have a short conversation. Maybe you decided to add on an addition. Maybe you decided to get that flight simulator that you wanted to put in your house, and you want to know. I mean, I would want to know. Is that flight simulator that I just spent, however much money you spent on it to get it, is that covered, and is it covered properly? And if it's not, can you fix it? And typically the answers are yes to those things. So, don't be afraid to ask questions. Don't be afraid to, when an insurance agent gives you a call and says, "Hey, let's do a quick review," take advantage of that. A lot of times there's ways that an insurance agent can talk with you and at the very least explain things, answer your questions, and who knows, there might be new discounts out there to maybe offset some cost, and you never know. It's never going to hurt to ask. So, don't be afraid to have those conversations. That would be my recommendations.
Yeah. That was helpful, but do you have any specific tips for sellers? Should they keep their coverage until closing,
Yeah, you definitely want to keep. So you're selling a house, and the closing next is 30 days from now. Don't cancel the home now. You got to cancel that house as soon as that deed gets out of your name, because if something happens, you can't. Hey, great, we just accepted an offer and they're going to close next week. You don't think about. You don't want to you definitely don't want to cancel it then. You want to cancel it after paperwork's been signed, keys have been delivered, it's no longer yours. Then is the right time to cancel, because any time before then, it's still your property.
Yep.
And you still want to make sure that you're protecting your assets, because if something happens to it, they can still back out of that deal. And now what are you going to do? And so, yeah, absolutely. You sell a house, if a house becomes vacant because maybe you've moved into another home and you're selling the existing one, kind of a thing, there's some time frame there. A lot of times insurance companies get a little awkward and a little frightened about that word vacant. But depending on the situation and depending on the timing, typically might not be a big of an issue as you might think it would be. But ask those questions. When is the right time? Don't just make assumptions. Lean on the people that are in this world every day that can give you the right answer, so that you're not putting yourself out there where you don't need to be.
Yeah, man, dude, Matt, bro, thank you so much. You've given us some really great insight today. Like I said, I've been delving into this because of the California thing, but I definitely learned some more stuff about what's going on here in our home state of Indiana. So thank you so much for the informative discussion.
Absolutely. I'm happy to help, and wish you guys the best. This is awesome. This podcast, I think, is reaching, hopefully continues to reach more and more people. And it's really about education. It's really about letting people know what it is that you guys do that's out there. And I can't commend you enough for what you're doing. So awesome job.
Yep. And for our listeners, if you have any questions about homeowners insurance or just need any recommendations, don't hesitate to reach out or leave a comment.
Yep. And before we go, don't forget to subscribe to the Realty Rundown on your favorite podcast platform, and follow us on social media for more real estate tips and insights.
All right, guys, I think that's it. We'll see you next time on the Realty Rundown. Remember, we are on Spotify now as well. So if you don't have time to tune in and watch all of our beautiful faces on the video, you can get the audio on Spotify and you can listen to it anytime that you like. So again, from the Realty Rundown and the Nick Wise team, we thank you for tuning in, and we'll see you next time.